Alrighty, we might as well get started, guys. Welcome again to another session with Down Under Trading. Today, I want to go over the length of the crypto cycle and when does it look like that we could start looking to hit some all-time highs or peaking for Bitcoin. Now that we've got a bit more data and we've broken through the prior all-time highs. I have done a little bit of homework to save me going through it in the live session. Makes it a little bit quicker. So I'll just jumping into this bear chart here. It's going to load up for me. Okay. All right. Now I hope that we're going to be able to see this properly. Just give me a sec. I'll get us all set up here. Okay, so we're on the monthly view here. I've posted previously around where I think the price is going to go, and this is on the logarithmic chart. We've got the trend line going here from the 2017 high through to the last bull cycle high going up, and then we've got down here from the current cycle low. On the regular chart, this line looks a lot more better, I would say, and on lower time frames as well. And so that has us going up in this sort of rising wedge and peaking up into this golden pocket up here, hopefully, which sits at around 175k, more or less. Doesn't mean we have to get there, but that's the crux of it before we start toppling over. Now, let's delve into cycle lengths. So I've got marked up the top here some time frames. So we've got 9 bars, 10 bars, 11 bars. What this represents is how long it took for Bitcoin to make its all-time high for that cycle once it broke through the prior cycle all-time high. So basically back here in 2013, we broke the prior cycle's all-time high, and then 9 months later, because this is a monthly chart, one month is 1 bar. 9 months later, it peaked and entered its bear market. Then in the 2017 cycle, hit past the all-time high, and then 10 months later, it made the cycle all-time high before it entered its bear market. And just to finish this off, it took 11 months in the prior cycle, and this time around, we have broken through the all-time high. So 11 months. If we go with the maximum from what's happened previously, we'll go with 11 months. That puts us at around February next year for Bitcoin to hit its high. Or at the earliest, if we went, say, 9 months, that would drop it back a couple, put us around December, give or take. So based on that data, I think we're looking for around a December to February peak for Bitcoin, which is a bit sooner than what I was thinking, based on what has happened historically. When it does break through, for it to break through the prior all-time high, I was sort of thinking maybe we're going to break through the prior all-time high a little bit later, in, say, around October, give or take, November even. And that would have pushed this data out to the second half of next year. But, we've broken it early. So now that we've got the new data, we can make these more accurate predictions, I guess. It doesn't mean it has to happen. But if we're going off what's happened previously, I think we'll be looking for around that January, February period for us to start peaking for Bitcoin. Now, going on the bottom here, I've gone a little bit further and looked at cycle length. So this is back in the very early days over here with a 38 bar cycle, about 3.5 years or so, maybe a little bit less. And interestingly, the next few cycles have been 47 bars. Now, there's a lot of different information bars here, but 47 bars again. And so now I've measured this one out as 47 bars. To do these measurements, you measure it from the cycle low to the next cycle low. That's where it's taken from. So going off this, that'll put the next cycle low to occur around October 2026, which is interesting because we see, particularly in traditional finance, very significant lows are formed in October and also March. They're the two key months when you typically will find a very crucial key low is formed. So yeah, I found that interesting that's what that lines up with. Now, the other interesting part is I've got marked on the bottom the bear cycles and how long have they lasted. So over here, we've got a 12 bar cycle, which goes so the 12 bars is if you go from, actually I'll start down here because I want to talk a little bit more about the last cycle. Okay. So starting back in 2013, the bear cycle lasted for 14 months before it made its low. And then it did have a secondary scare in August 2015. So arguably, you could potentially drag that out and say it was 21 bars. But I'd probably lean towards the 14 bar in this instance and calling that a secondary scare because it really pushed off from that, which is a bit similar to what we did as well when we came down to 15.5K, and it's not going to show it in the monthly chart, but then when it capitulated down to 19.5K and sprung out and really went on and went for a decent run. But sorry, we'll get back over to here. Okay, so at 14 bars, the next one was only 12 bars, but it also got a secondary scare, and that's the COVID crash. Bit of a black swan event, I would say. And then we get on to the last cycle. So I've got 12 bars here because that is from the literal all-time high to the low. I've also got 19 bars here. The 19 bars is from the first all-time high that was made before it had almost like a mid-bull market pull back, and it pulled back right to the 50% level before it took off and basically swept the prior high before capitulating into the bear market. The reason why I've got this one marked out, and it's 19 bars from this high, is because there's a lot of people out there that believe the bear market started in April 2021, and this is essentially a bear rally. So it is interesting. If we assume that February is going to be the high, then that leaves us for a 20 bar bear market, which isn't out of sorts if we go back and have a bit of a look at what's happened historically. You can manipulate this to sort of suit yourself. Like, you pull this out, you got 21 bars. If you go to there, You pull this out to the secondary scare for the COVID crash, we've got 27 bars. If we go from the original all-time high in the last cycle, we've got 19 bars. The other thing with this as well is this bear market, I feel, is going to be a lot more catastrophic than the last one that we experienced. We only let me just get out of this a little bit so I can do some drawings. Price range. Oh, I've got to go the other way. So we only pulled back 77.5%. Now it sounds like a lot, but compared to what has happened previously, it's actually one of the smallest pullbacks that Bitcoin's experienced. So we go to, I might delete that, so I can see the bottom better. So this one was an 84% correction. %87 correction. So based on the prior two cycles to the last one, we got off relatively good. So I feel that this next bear market that looks to be coming or starting next year, the bear market starts at the high, at the all-time high, to the low. That's the bear market period. We could start seeing back in that 82, 84% realm, exceeding what happened last time. So hypothetically, if we did get up to 175K, that would put us a retrace down to 27,500 as the low, roughly, which is pretty crazy when you think about it. Nearly hitting 200K more or less, and then retracing all the way down to 27.5K, which is only about 12,500 or 12,000 off the prior cycle low. So this is what I'm sort of looking at the moment. Now, what does this mean for alts? It means that alts are probably going to start rallying probably in around 3 to 4 months' time, probably around July. If this is to play out and the peak does come in February, actually, we might just jump into the Bitcoin dominance chart and have a look at what happened last time. Onto weeks. So the Bitcoin dominance last time dropped off. Basically, this is its alt season here. When did it start? So it peaked in September. Oh, we're going to jump in. We're going to jump? Nope. So we got a peak in September. And then for 1 year, it basically went down. We'll jump into this chart just so we can reference where the prices are at. So we saw it peak here. And then it ran down to here. Bitcoin takes off to go to its high. So that's Bitcoin taking off to its high. We go through to December 20. Let's see what Bitcoin was doing in December 20. So around here, when it's broken through, maybe we'll jump into this chart here because we can see history a bit better. So basically, when it broke through the prior cycle high, it's got up to this point here. It's had a bit of a pullback. This is where we start to see the dominance start falling away. So basically, Bitcoin's trading up in all-time high territory. It's in discovery, and the dominance starts packing up, basically. Wrong one again. And from that point, it was 4 months later, and it topped out before it had a really big pullback. So, and this is the pullback period here. And then November is when Bitcoin hit its all-time high at 69K and entered its bear market. This is the bear market. That's the cycle low at 15.5K. And then the Bitcoin dominance has taken off ever since. So I think that we're starting to definitely come into this period here, or when we're topping out, and we're going to start having an alt season. We just hit my target zone, which forms off these lows here, these lows over here, or support areas. They were originally support. That's the whole idea of where I come up with it. You also have when it was resistance back over here. The alt market is so much bigger now that it was. I think it's unrealistic to expect Bitcoin dominance to get back up to the 75%, 80% area. I mean, it could. Anything's possible, but I just don't see it. At the moment, we're still in an uptrend, but I don't know. I'm starting to feel like this here could be the high when it taps 57%. And if we just look, it's only just made it into my target zone. I was fairly proud of that one. But anyway, enough about me. So I think we're at where we are right now with the Bitcoin price action. It can come down, and it can come down to, as a worst case. Let's zoom in here. I honestly don't see it going lower than 49K. That's almost a floor price for me. My actual floor price is 44K. Might be easier to see this on a monthly chart. This is probably a really bad chart to look at. We'll pick a bear one and I'll redraw them. It's one I haven't used before. All right. So floor price. We'll chuck up some fibs real quick. Settings. Floor price for me right now is 44,600. I don't think we'll ever see it close below 44,600. I honestly don't think we're giving it. We won't see the price go down to a number with a 4 at the front. If I'm speaking completely honestly. Now this is a fib on the weekly chart. So 52K is possible. It definitely is possible. It lines up with these tops here. I was actually one of them. There was a lot of people that were saying that 52K, it can't go any higher. That's where it's going to stop. We're going to have a retrace from there. And it did for a couple of weeks, but then it just pushed on and pushed through. And it never really came back down to test this area. And it didn't do much trading whatsoever above that 52K to 60K until we broke into this range up here. So there is definitely a case for coming down and doing some trading in here before taking off again. If we go back and delete them so it keeps this chart nice and clean. Maybe it's easier if I flip it. If we go back and have a look, there is very little solid wicks that hasn't been, or solid wicks going through a price range that hasn't been traded before to some degree. And we had this big wick down, then it traded back up it, and then it caught it over here as well, filled up the rest of the wick with trading within that range. The only exceptions I would say is probably from around 17K up to around 19K. Really didn't see any trading, but that's a fairly small range. When we're seeing these big candles, they're from 17K up to 22K or 21.5K. We even saw it in this price range here, 35K, 30 to 35K. It's been traded extensively back here. Where we haven't seen a whole lot of trading is in this candle. I suppose when you do go back and have a look over here, I did spend a bit of time trading there. But this is a pretty damn big candle. This, it's how big is it? 51, 63. It's a 12K candle. That's pretty damn big. If it does fall down out of this below the 60K range, I think it's going to spend a bit of time here. Maybe 1 month to 2 months at most, churning and then taking off again. We do have some leading indicators to say that this could potentially be the case. Actually, this is a bad chart to look at. This one, it doesn't show it properly. Maybe jump into this one. Okay. So we've got 1, 2, 3, 4 red weeks. If we go back and have a look, what happened the last time that we got 3 red weeks? Went 1, 2, 3, a little bit of sideways or a slight bounce, and then it fell down. Same thing over here. 1, 2, 3, bounce, and then it fell down. It didn't fall down much, but it fell down nonetheless. Here is an exception when it didn't happen and it bounced up. So we're 2 for going lower, 1 for bouncing. And then we don't really want to look in the bear market side of it. Or else have we got an example of 3 reds? 1, 2, 3 reds, and then a bit of a churn sideways before it took off. We've got a few here. 1, 2, 3, little bounce, falls over, but then it continues down again. So getting these multiple weeks of red is not great. It's not good. But it's not hopeless at the same time. It can definitely bounce. I have drawn this little. And I only did it just tonight. This falling wedge as well. It looks to be fairly well respected. At the moment, I really want to see what happens at 61.1K. I'll jump back into this chart with all my squiggles. I can delete that so it cleans it up a little bit better. Oh, shit. So I'm really keen to see what happens at this 61.1K level. So far, this has played out pretty good so far. We did come up. We did sweep that high. That was also a 618 level. Rejected from there. My next port of call was a 768. It's if I chuck a 768 on this chart, 768 618 on this chart, it's now trading below the 618. So I think it's definitely going to come down and at least hit this level here before it does start taking off again. Or it doesn't take off and it falls below. In which case, we've got 58, 660, which is it'll be sweeping these lows. It can bounce from there. If it does go lower, there is some key levels in this range here, but I think it's more than likely going to come down to that 52K. I can talk about these if you guys do want, but yeah, if it falls below, I think it's going to be more of a capitulation down to the 618 down here at 52K. Yeah, something that I'm watching, and we'll jump into the near Bitcoin chart. I know you guys do love a bit of near. Near's holding is doing really good. Quite impressed with it. I would have liked this bounce or recovery that it's had to pop above these highs here, even if it was just a wick to say, 1,300 satoshis, something like that. Would have liked to see it wick up, but nonetheless, it's good to see the strength coming into it and bouncing back above these highs here. Hopefully, it can hold these range highs as support. If Bitcoin does go down, that'll mean NIR is going to go down as well. But at least it's strong against the Bitcoin pair, or at least neutral. We can jump in and see what Sweat has been doing as well. So this is probably a bit more bearish, if anything. I did talk at length about this red line last week in last week's call. Wanted to see it get back up above and closing above, but at the moment it looks like it's being flipped to resistance. So it's only going to have so many attempts before it starts testing these lower extremities, I think. This is not a good alt Bitcoin chart. And Sweat's not alone. There's heaps that are like this. Even some of the blue chips are like this. We go to XRP. And you just know that XRP is going to be rubbish. Like, look at that for absolute filth. It's just one way ticket to downtown. Yeah, can't believe that there's influencers out there still shilling XRP. But anyway, one we have spoken about a couple of times recently is DOT. We can have a look at DOT. DOT not looking too healthy either. There was a little bit of life come into it. It did look like it could be starting to flip its trend, closing back above here, but it's making more lows. Not good. All-time lows. That's not good. Is there anything you guys wanted me to have a look at specifically? Oh, g'day, Baldrick Hunter. Good to see you guys. Sorry, I've just been running off on a bit of a tangent. Hopefully you guys caught most of it. Hey, Kitty, how you going, mate?
Good actually. You know, it's good to know.
That's all right, mate. Oh, Injective. I haven't heard about that one in a little while. Yeah, we can have a look at Injective. I'll see if there is a pair for PROPY against Bitcoin, Hunter. I'll just take a look at Injective first. Yeah, it's a nice chart until you see the last sort of 4 months, I suppose. It has fallen off a bit. It's still okay. We probably you really don't want to see it dropping below that 3,000 Satoshi mark. So I suppose from an investment perspective, look, if you're going to be buying some alts, and you put dot XRP Injective on the table, it's a no-brainer. You're going to jump into Injective here. That's for sure. It's definitely one of the stronger alts in that regard, but it is a little bit worrisome how it has just been sort of falling over. But in saying that, it's run up. Didn't really have a lot of consolidation. We did get a little bit in October, November, but it's got massive candles here. So I think based on the Bitcoin pair, it might be worth a bit of a double. I don't even know what it's trading at against USD at the moment. $25. And this looks like it's going to probably fall down a bit more. Maybe come back down to that $18, $20 level. Something like that. This is interesting. A lot of this sort of does hinge on how far does Bitcoin go. But if Bitcoin doesn't absolutely shit the bed and get below 45k, just maybe hits that 61.1, 58k level, something like that. Not too much lower than that. Could see something like this for Injective. The reason I say that, and I'll jump into the Solana chart in a minute, and I can show you an inverse version of it. We've got a deviation below, it's bounced up, and now we're going to test and bounce, something like that. And now I'll show you Solana. Hopefully I've left it in there. Yeah. So we got the exact same pattern here, but just inverse, where popped up above the 786, come down, hit the 786 and rejected and gone. That something like that could be definitely at play for injectives there. I think injectives not looking too bad. Around that $20 mark could be a bit of a buy. PROPY BTC. Let's see if it comes up. Yeah, we got one. Oh wow, it's a pretty impressive launch pad. It's had there, Hunter. I think it's looking not too bad, to be honest. Hasn't put in a lower low. Where it's taken off, and we can zoom in on that a little bit. This is a high low as well. It's come back down, and then it sprung off that level. So what's it trading back at? Trading back at July 22 levels. It's coming back down now. Where can that sort of come back to? So first things first, don't want to see it. Ideally, you don't want it coming beneath the 50% level. If it doesn't get beneath the 50% level, then it suggests that the upswing isn't over with yet. And it's strong. Above 50%, it's strong. Below, it's weak. And that's when you can start maybe getting, say it comes to 786, then it'll bounce up, and then it can start tapering away off to the side perhaps. However, if we come down to the 50%, then maybe we're going to bounce up, make a new high, little correction, bounce up, make another high, and the swing continues before it does get that deeper pullback, and go back into a bit more of a consolidation period. So yeah, I'd be keeping an eye on that 3,300 Satoshi level for PROPY and seeing how it interacts. Does it start bouncing, or does it get to it and get a little bit of a soft rejection? Then it might start fumbling below the levels. PROPY's looking good against Bitcoin. That would have been a nice buy in this zone back here, that's for sure. Not sure I'd be diving into it right at the minute, just because it is in a little bit of a correction phase. But yeah, somewhere back down here might be an opportunity. Oh, which one's that with, Kitty? For about 5 minutes ago. That's probably injective, I reckon. Was there anything that you guys wanted me to have a specific look at? I guess, Kitty, you were talking about buying some sweat, so we could maybe have I have already talked about sweat against Bitcoin, but we can have a look at sweat USD. I did touch on that a little bit last week, but I might just cover it off quickly, given that I'm pretty certain that 90% of us are invested in sweat to a certain degree. As you guys may know, I did sell a little bit over the weekend or just before the weekend to rotate it into CAS, which I've completed that now. Sweat for me is not looking good. It's bearish. We've broken down. We've made a lower low on the weekly time frame. Really wanted to see these levels here hold, but it didn't. It just literally sliced straight through them. It's come back up, tested those range lows, and has rejected. So now looks like it's going to be coming back down. I don't think 0.0085 is going to hold, which is a key level for sweat. It definitely could. It is a key level, which is this low over here. Hopefully it does hold for all of our bag's sake, but I'm suspecting that it may not, particularly if Bitcoin does come down to say 58k, sweat will not hold it. It's not a guarantee, but it's pretty damn close to a guarantee. I think it'll probably come down to this 786 level at around 0.0075. So what does that mean? Is it a good buying opportunity? It is a good price, but it is also then, from a chart perspective, it's not looking strong either. So whilst you might be getting a good price, are you going to get a good return on that price that you're getting into the coin at? And Sweat's not the only one that's like this, but I'm talking about it because we all either invested in it or perhaps looking to invest in it. It can definitely flip the switch and moon, but the likelihood is less likely than something of a similar market cap that perhaps held these lows, held these range lows, and hasn't put in a lower low. Like for instance, NEAR, I know it's definitely not the same market cap, but the NEAR chart looks a hell of a lot stronger. That's the last swing lows on the weekly chart, down at $2.50. It's a long way off from $2.50, but that's because it had this really nice run up. Then it's corrected, and it went from $4.20 back up to $7.50 more or less, which is it's almost a 2x, when you compare that to how Sweats behaved. It got down to 0.008. So if it did almost a 2x, that puts it at 0.0116 or 0.014 or somewhere around there. But it didn't. It barely got back to 1 cent before it's already almost, it's within 10% of its low again. So definitely underperforming at the moment, and it's looking quite weak. Hopefully it does change its tune. But at the moment, we can only sort of go by what we're looking at. I think that low there will be used as liquidity for the key level. So definitely, I've got a few marked levels here. That 0.0062 level that you mentioned, Kitty, I've got that marked because it was a very key level when we were down at these lows here. Can see it a lot more prevalent on the daily chart. It acted as support, capitulated through it, acted as resistance, and then we pushed through it, flipped it to support again. And then that really is what propelled Sweat off when it came back down, tested it for the second time, and took off from there, never to be seen again. So, yeah, I really don't want to see us getting down to this 0.0063 level. We've got at least two levels to watch beforehand. At 0.0085, which it's still there. We have to treat it as support until it's broken. Same as resistance levels. It's always a resistance level until it's broken. But at the moment, we've got that 0.0085. And then there is a bit of strength in this zone here at the 786 and slightly below down to probably 0.007. I think that would be a very strong support area as well. We did try to attack this level on high volume, as we can see down here, and it got rejected. but then it did push through it a little bit later. So I think this, around that 786, hopefully holds up if it does get tested. Who takes longs on sweat? Heaps of people. I've taken longs on sweat. You can stake them and go long with your USD or short on your USD. I did mention a little while ago. I can't remember if I chucked it up in the Dutch chat or whether it was maybe over in the trading chat in sweat. But I did feel that April and May were going to be that there was going to be extra sell pressure, and same with around, I think it's November. I think that there'll be some more sell pressure as well, predominantly due to being there was that they had a vote back last year in around this time, April, May, and it was a burn vote, but there was also a portion of that burn got allocated to users proportionate to the vote, and how much you got allocated depended on how much sweat you had staked for 12 months. So it would have been a pretty large amount of sweat staked at that period, which is now unlocking at this current period. On top of that, you also have all of those bonus sweats that got allocated to people on unlocking right now. Yeah, there you go, Baldrick. You got 55K from it. Yeah, yeah, that's right. So I think when you're going to have large cohorts of people unlocking tokens at the same time, some are gonna restake, no doubt, but you're definitely going to have some people realizing their profits as well, or moving it into other alts, which is sort of what I've done. Oh wow, yeah. Based on, I'm not sure if you caught our discussion around. Oh shit, you got a few there, Baldrick. I'm not sure if you caught our discussion around cycle lengths, but I definitely recommend that you watch the recording if you missed it, before you consider locking up your sweat again. Obviously, not financial advice, and you do you, boo, but I'd definitely give it a look. Yeah, no worries, mate. Um, so I suppose you might not have caught on just yet, Mystic, but MEXC has turned KYC only. For those of you that may use it without KYC, by June 30, the only way to use it will be KYC. They're rolling it out randomly to random users that are current members, and all new users need to KYC with them. So that's fine. But for those that are already using them and maybe KYC'd, I have got in the Pipeworks another exchange that wants to bring us on board as an affiliate, as a partnership. So excited for that if it comes to fruition. Hopefully, I'll have some more information about that in the next day or two. They are a non-KYC exchange, so it sort of helps fill that void. None of them are trustworthy, Mystic. Trust no one, mate. Yeah, they did. They did. They I think Bybit may have done something sort of similar to MEXC, because Bybit used to be a non-KYC exchange as well, and they had really good fees and stuff that they brought in, but it was very, I guess, over a month period we got no fees, and then they bring the fees back, and they're trying to bring in a user base, and then out of nowhere they started saying, "Oh, you got to be KYC." And so it's almost like, they try to draw in a big crowd, and then they're like, "Oh, we've got to obey the regs now." So they put the KYC hammer on everyone, and then everyone starts looking for the next exchange. And at that point, I think it was BitGet didn't require KYC, so everyone moved to BitGet, and the exact same thing happened. Now you need KYC there, so everyone went to MEXC. Just the cycle, the exchange cycle, I'll call it. Yeah, that they definitely don't help Hunter. They definitely don't help. But it's interesting that the exchange that we're talking to at the moment, their CEO is fully docked and on LinkedIn and Twitter and all that sort of stuff. But yeah, to an extent, I don't how are they going to get around it on Dexes. That's when it starts to become tricky because who's accountable? There's no one accountable. You know, the SEC and FBI, they're not going to be able to chase someone on a DEX, and so then it begs the question: why have one set of rules for a centralized exchange and a different set of rules for a DEX? So I think there's a bit of a case to be argued there. And with Web3 taking off and stuff like that, it's making it even harder for the likes of Google to control what you may and may not be able to go onto. Yeah, potentially. I really don't know a lot in that department of how the dev side of it works. Yeah, as long as there is some centralized exchanges that don't require KYC, just due to the tax implications here in Australia, I'll continue to use them. Because the big thing for us over here is if you're in a stock or in crypto, if you hold it for 12 months or more, you get a 50% discount on your tax liability. Whereas if you trade that or realize a profit within 12 months, you're liable for the full tax implications of that. So if you're able to sort of get around it by doing your short-term trading on a non-KYC exchange, you can sort of bend the rules to sort of work for yourself a bit. Oh yeah, Baltic, yeah. Taxes, fees, and commissions are my largest concerns in trading. Yeah, there's some of the exchanges are pretty high in their fee structures. That's for sure. Like KuCoin's one that's up there. Mexi's pretty reasonable. Also found Bybit, their fees are probably fairly normal, in line with perhaps like Binance. Um, but yeah, there's definitely BitGet was pretty high with their fees. Yeah, look, Baldrick, if we didn't have a discount available, then I probably wouldn't worry about non KYC exchanges as well. I think crypto.com's got some pretty high fees as well. I've never actually heard of Uphold. Coinbase has some decent utilities of the exchange, I suppose. I don't think they charge much fees for on-chain transfers or any fees for on-chain transfers. Exchanges report your P2P transactions. Probably do, because you've got to be KYC to do a P2P transaction. So I would say that they would. You'd probably be better off seeing if you can. Well, it depends how much you're trying to put on. It might take you a while, but doing bank transfers onto an exchange, or yeah, doing Pay ID, Kitty. I know that only limits you to $1,000 a day, but the P2P transactions, they're also, you get a pretty piss poor rate with that as well, man. I think for the for this session, I might close it up, but I'm happy to stay in voice chat and continue chatting with you guys. But just for the recording sake of it, it does start to get a bit long, and it makes it a lot harder and more timely to compress it to be able to post it up. Is that cool with you, Nomad? Easy, and like you said, the fees weren't too bad. Yeah, but I do quite enjoy Bybit though. It's just a shame that they don't do bank transfers. You got to do P2P with them. But for us Aussies, I've got a feeling maybe Bitget or Kraken or something does might do bank transfers, but I've KYC'd on too many exchanges, so I don't want to do too many more because it starts to get pretty messy when using the crypto tax calculators at the end of the financial year. It takes forever, especially when you've got around 10,000 transactions to put in there. So I'll just give you guys a heads up on Wednesday. Around the same time as what we started tonight, I'll be jumping over into the Sweat Hangout and having a bit of a chat in there about crypto and stuff. Pretty informal. I think we might be recording it. But yeah, feel free to join us. If I've got good weather here, I might go do a bit of a sweat walk and talk. Won't be anything too in depth though, to be honest. But yeah, feel free to join nonetheless. Yeah, no worries, Baldrick. Look, I'll probably just be sitting on the couch having beers. I'll be honest with you, mate. 'Cause it's like 9:30 my time at night, and it's my last night here on the sunny coast as well. So I've got to finish up what's in the fridge. Depends. You'll get a please explain. Um, if it's something that's reported directly to them, that you'll get a please explain letter about it, or you may have made an error. They'll give you an opportunity to fix it. But if you and it depends what sort of income it is that you're talking about as well. A CGT event, yeah, $1,000. Yeah, they'd probably send you a letter about that. I would imagine. I've never actually had any issues with the ATO before, mate. Touch wood. In my what is it? Oh, geez, makes me feel old when I start thinking about how long I've been filing them for. But you just got to remember, mate. You got the 7-year rule. Once you got past 7 years, they can't come after you for it. So if you're going to pull dodgies after 7 years, you can stop clenching your ass cheeks and move on. uh, and it helps if you go through a tax accountant as well. For one reason or another, they tend to brush over taxes that have been filed from an accountant rather than doing it yourself. And they also have the accountant that I've got. He's always said, if you ever get a letter, don't reply, don't do fuck all. Send it to him, and he'll tell me what I got to do and get it sorted, basically. So it might cost you, $180, $200 a year, but they'll be worth their weight in gold if the time ever arises that you might need to lean on them. All right, guys, I reckon with that, might call it here. It's getting on to just after 10:30 here. Yeah. If you don't have one, I highly recommend you get one, mate. Without a doubt. But yeah, take care, guys. Thanks for joining in. And we'll schedule something for next week. It'll probably be early in the morning for us, Kitty. I doubt you'll probably be awake for it, but the other guys will be probably back to the late evening UTC time. So we'll catch you then.